All right, so clear this. So I'm going to be giving a strategy, smart money concept wise, of how to get into these moves, even these bigger moves and stuff. Even if the market is going to enter into a bigger move to go to the upside, the way smart money concept does it very well. So first of all, this is the H4. Obviously, you see the divergence on the RSI. I don't usually use um, indicators. I have it there if I need it. Reversal traders have fun on this GU. So let's get into it. So the origin of this push up came obviously from the demand zone. It's right here. This demand zone. The origin of the move came from this candle, the last red candle, the wicks. That's why it came, tapped a little bit, came back up, right? This is how, with and what I've noticed with trading supply and demand, what you can do on lower time frames is golden, because we all trying to do the whole prop firm thing, and it could be a challenge doing the prop firm. But I'm going to show you how you could possibly, if you get this down pat, these supply and demand zones, this whack off theory, if you get this together, you'll make your trading easy on those prop firms. You want to get the prop firm money. Now, yes, there's multiple ways of trading the market. Now, obviously, there's inverted head and shoulders off of it. There was that divergence. Everything's good. You want to learn the basics, because the basics is a foundation for whatever works for you in the future. So the basics is just like going to middle school and in grade school. But when you get in college, you take all of those basics from grade school, A, B, C, 1, 2, 3, and all that, and you apply it to calculus, and you apply it to, whatever you're doing. So we never want to take away the basics. So understanding market structure and market flow is very, very important. But you need to know this. This should be a part of basic trading too. Where the markets or where the banks are buying off should be the basics. Okay, so let's pretend like all of this move right here never happened. We're down here. You know this is the zone that it created. Create the zone. And obviously for the market does the push, and then this is the accumulation. So when it does the accumulation, then it pushes again. So that push right here, right there, is the supply zone, the last red candle. We have supply zone right there. And it's a new supply zone, because we're not worried about the past right now. I'm not saying not to worry about the past, but you get what I'm saying. So obviously we know for sure, as trading supply and demand zone, that this wants to come up and touch this supply. So pretty much everything in the middle is what other strategies are looking for, M's and W's and EMA crossovers and all that great stuff that we learned. It's okay. But what I'm telling you is this here with supply and demand is going to be one of the greatest things you ever learn. For me, in my trading, it was one of the greatest things to learn. So, like I said before, none of this move happened. It accumulated order, and then it pushed up right here. So we can come over to a lower time frame. We know that that's still the H4 zone, right? This is what I do. I come to the M1. This is where your basics is going to have to come in at. Use your basics to make some money now. That's the H4 zone, right? So here it is. It's tapping it. It tapped it. It came right here and tapped in right there. See the value? This is why I use the value on the M1. Even like, let's just say it was right here. The volume is the banks coming into the market. So this move already happened. You were waiting because it was waiting to come back to tap the zone because it just taps it a little bit. I'm trying to figure out. So this move right here, this shoot up right here is the banks putting their orders in because that's what the volume is. So you knew the banks put the orders in. So it came back and tapped again. Now, and I'm going to show you other things, but it tapped up there. So I love to see that that volume is right there. Now we have some sideways stuff going on here. Now there's other ways of going about this. You know, some traders can come in here and do this because you think it's a channel, you know, use your little basics. That's fine. I'm using the M1 RSI. The M1 RSI is saying bullish. So ultimately on the M1, you could get in, and let's just say this is a prop firm. And from right here, you're risking about 1 to 2%, right? And remember, keep in mind, this is the M4 demand. So your trajectory is going to be huge, especially once you start to understand this, what I'm saying. So you know that's the M1. You see the bigger divergence. You see the demand zone. You went to that M1 and found that divergence. You put it below that move because that with zones, the market pushed up, and you saw on the M1 right here, the banks came in, and this was an imbalance, so it had to come back in to tap the zone. You got in, you was risking 1 to 2% on it. You're on the H4 looking for a move. You're just trying to come to this structure high or something like that, right? And look what happens. This tight stop loss, risking 1 to 2%, and you've made all of this. One trade cleared the whole account. Got your 8% probably if you risk 2%. You don't have to risk 2%. Like, I mean, you had a 10K account, you could risk 0.5% on this trade. Even risking 0.5%, this was probably going to be like 3, 4, or 5%. So you risk 0.5% to make like 4, 5, 6% on one trade. That is profound. Off of the zone. Now you're up 5%, and obviously you got to trade every day on those. Which is perfectly fine. So it is what it is. Now you know this accumulation created a supply zone and it dropped, created demand. So here it is. It's coming up. Do all this other extra stuff. Maybe a tap down there again, and now you can get another buy off that. Whatever. So you know whatever goes on in the middle is coming back to the supply zone. Sometimes it doesn't, but you know, it's GU we talking about here. We've been watching GU for long. It's gonna come back. So you know it's coming back here. You can either wait for it to tap back into this zone and take the buy again, because once it goes away from the zone, the longer it's away from the zone, the most likely, if there's an imbalance, meaning too many orders that have been filled, it'll push down and collect more orders off of the order block. And they come in, and you can get that same setup with that tighter stop loss, or, you know, put it below the zone, whatever you're comfortable with, and clear it again. And then right here, you know it's coming to the supply zone. It created this fresh supply zone. When it creates a fresh supply zone, there's a higher percentage of coming right here, reject a little bit, consolidate a little bit, and then crash. The consolidation is just redistribution, the whack-off theory, right? And from the redistribution, you can get you a nice drop, short position, take you like 40, 50 pips, get a tight stop loss again on that M1, wait for that volume. The volume on the M1 allows you to realize that the bank is coming in. And then you take this trade. Now you're good. Now, what I want to explain is this before I show you another example. Let me get my box up. All of this is accumulation. The market pushed down and all retail traders are buying right now. You got buyers from retail traders. But what ends up happening is, in order for the market to continue going down, it needed to do this to trap buyers. When the market traps enough buyers, and obviously let's just illustrate this. So you know, oh, wick right there. You know, you're a retail trader, right? Wick right there. I'm gonna put my stop loss below this. This is some type of support right here. I'm gonna keep buying. Oh, hit my you know, you're gonna go get setups off of this. There's a W right there. I'm gonna get this set up. I'm gonna take it back to this, you know, this lower low right here. Obviously, some people probably trying to take it back to this lower low right here. Tap. Oh, buy again. Buy. Oh, it's a W. Buy again. It's coming up there. And what you just did is became liquidity for those sellers off of this. Let me go there to it. I'm gonna go there to it. Stay with me. This was a whole supply zone right here. It's a seller's market now. This order block created selling pressure from the dollar against the pound. But you didn't see that because you don't know anything about order blocks and stuff. So you're sitting here buying and you're becoming liquidity. And once the banks have enough liquidity, they're gonna flush you, all retail traders, wick you guys out because you probably got your stop loss below this wick. This is gonna wick you out, take all your money, and then accumulate again right here. We got more accumulation. People probably putting buys in again, and it flushes you back down again. And now you're frustrated. But that's how the market moves. It needs buyers on the other side so it can collect liquidity, so it can continue pushing down. Now we're at order block now. Now we at the order block that it wanted to go. And I could take this into, you know, with these order blocks, you could take them into the past. So this was the area that it wanted to go to. When it hit that supply zone, the banks already knew it wanted to come down there, but it's not just going to have one candle come down there. No, it's going to collect orders, collect a whole bunch of orders right there, collect some more orders, come back, collect orders, collect. All these buyers are getting into the market. Enough buyers in the market, cool, drop that. Now you were on the wrong side of the trade. That's why it's called smart money concept. The smart money is the bank. The dumb money is the retail trader. And it sucks to say, but the retail trader is the reason why the bank does some of these moves so they can make their money. And that is how the cookie crumbles when it comes to trading. So now, like I've said before, understanding what the banks are going to do off order blocks and off zones is very crucial. Understanding that, you know, you might just be inside of some accumulation square and you're just buying and buying and buying, and you think it is going to come back up and touch this retest area. Because, you know, I used to be a break and retest trader. So when they'll break, I'll think it'll come back up here, then keep going down. No, it came up here, trapped a whole bunch of buyers, consolidated, you know, did some more distributions, and then collected enough buyers to drop all of us and make more money off this move. Now that it's at the demand, then the pound bank is collecting orders. The pound bank collects orders off the order block. Now it's time to start coming back and retesting old supply zones that were created. And obviously it could come right here and you can get a nice sale right here. But ultimately, we could possibly get a push back up and touch this major supply zone. There's a possibility, or the possibility of it just, from this point, it could just crash and make that lower low. And then come down here and give you some buying opportunities off that demand zone. But if this demand zone gets touched too many times, because that'll be 1, 2, 3, each time it get touched, it weakens. And us as smart money traders understand that. So you probably can get some scalps or whatever off that. But ultimately, if we come over to the past, this zone right here, let's do this. I'm not gonna put them all in, but obviously this was a strong demand where a lot of orders were at. Let me change that to bull OB and yes, I want to do settings, extend. So that order block needs to be fulfilled eventually, probably not quite yet. Look at all these order blocks down here. There's probably one that was right there that needs to be fulfilled. So let's come over here. Not saying that GU, I'm not trying to predict the future or nothing like that, but but when you're looking at order blocks, you have to ask yourself these things. Something like trading like the bank. Am I going to keep bouncing up and down, or do I want to touch this order block right here where I got off here? Let's go to the daily. So do I really want to come down to this zone where the money is really at? There is so much liquidity sitting on this order block. But ultimately, there is super D-duper, and I said it just like Barney, super D-duper money sitting on this order block too. So with that being said, I feel like GU, the dollar, wants to touch these order blocks. Or I mean, GU wants to touch these order blocks, especially the pound. The pound has buy limit, buy orders right here. So I feel like this probably will be the next move. Now, if it comes right here, look what happened. It shot all the way to the moon. Not saying it's going to do it again, but this is one of those things. When it's been the further away it is from an order block, that means the next time you bet your bottom dollar, the next time it comes down here, it's going to be major because it collected all that liquidity. And the sellers that were, let's just say people went long right here, swing traders or hedge funds or whatever, whoever went long right here, and they have their stop loss below here. And obviously there's an order block right there. Everyone that has their stop loss right here, this is why I said there's money right here. Because if it comes down here, it could just wick all these people out, create all this order flow to come back up. And it might have a deep pullback up here. Deep pullback back up to this zone. And this zone, look how long, it only touched it twice and it's been away from it. So when it comes back to this zone, you're going to get a big reaction. Like it's going to be a huge reaction. And this is not me predicting the market. I'm just, thinking like the bank at the point, because that's what smart money concept is, thinking like the bank. Now, last and final, let's get all this off. I don't need it. Let's go to the final thing that you want to look for. Now, obviously, I'll make more videos of this. Let's go to the trade that I took last week. NAS 100. Where are you, my great and faithful servant? There you are. Took this NAS 100 trade off that order block right there and flew to heaven. Why? And it trapped a lot of sellers. A lot of sellers got trapped right here trying to put sales in, and they wicked them up because ultimately it wants to touch this order block that hasn't been tapped in a while, and it'll probably drop. I don't know how long it'll probably drop down there. Who knows? Or it wants to come and tap this untapped one that it created. It come up there, then we might have a sale, big sale. And I like swing trading. That's just me. So last thing. So obviously this order block was created right here. Take this off. Stick with me. So the origin of this order block came from here, off this last red candle, cover up the wicks. And I like these. I'm giving you this example because look how it trapped all the sellers. I know people that were selling. Oh, this is a break and retest. It broke structure. No. What happens is it comes into these zones like this. And it's like a liquidity grab. It then, because it wicks, it traps sellers and wicks out buyers that had their stop loss too low. And then the market reverses. Now you see right here, right on the zone, right at the top of the zone, tapped it. So the third time, so this time it went in the middle. This time it came back a second time, which the second times are good. This zone, remember I said, the further it's away from the zone, the next time it come up, it's just gonna tap the top part and fly up. But see, the third time it weakened. See this to see, you can see with the volume tell you each time it touches the zone, it get weaker. Look at the volume right here. Look at the volume right here. Look at the volume right here. This touches this again, it's probably gonna break. The volume's not, but anyways. So this is the third time. That's why it went down into it. But see, I'm starting to see what I'm looking for here. So let's go to the M1 so I can show you how to get into these higher time frame demands or supplies, order blocks. So here it is right here. Now I remember as clear as day. This is when I got in. This is when it was like breaking and people were like, oh, it broke, and then it came up a little bit, and then it trapped all the sellers. If anyone trades on the M1, but what I saw was the banks got involved. Bank movement got involved. Bank movement, and that's why I use this volume on the lower time frame. So when it came down here, I already got in. I'm like, this was lower than this point. I already know this is a liquidity grab. And the beautiful thing about trading smart money concept, sometimes you do not need to look for W's and M's and all that stuff. You really don't have to. So you can get an airtight stop loss. Some people, I know some people that's get airtight stop losses. Me, I'm not there yet. I'll get there one day. So that so that on the M1, we already got it below here. And when I saw that candle right there, that let me know at this move, the banks are in. They recognize that this is the zone. And as you can see with your own eyes, H4. I don't know, where did mine? It's hard to see my area. Oh, there it is. Gotta move it over a little bit. And maybe that fixed it. And I took it to this structural high because there was a supply zone right there, but obviously it blew past that supply zone because it was trying to right up there at the top. So it blew past this supply zone right here. The origin of that drop came from there. Let do that. So the origin, oh, what'd I do? Remove. Come on now. So this supply zone, it caught a lot of sellers because look, it came right here and it didn't quite come up there. This candle, it tipped it. So people were in sales and they got little scalps, but the market is on an uptrend at this point. Not the overall uptrend, but this was the overall uptrend. So look what happened. Trapped all them sellers, hit them stop losses, and it's probably on its way to touch other zones, other supply zones, ultimately back up to that one. And probably some in-between stuff. This. So you see how easy it is? Might take some practice, but you'll get these bigger moves like this. This is what's the supply zone on the daily. There's a daily supply zone. The origin of this move was that blue candle. Cover up those wicks. It went into it. And when it went into it, like I said, man, I can't make this up. You go on down to that M1. Go on down to that M1. If you got to use basics and look for M's and W's, whatever you got to look for, go on down to that M1 when it's in that zone. Right here was some diversions. So I waited till it get to the top. I put my sell in. It almost wicked me out. Almost ain't none. It's not enough. I could have put it above the zone, but I had a little bit up there. I almost got wicked out. And honestly, if I were to get wicked out, it's no big deal. I'll just get back in. And ta-da! Look at that. Sniper entry. Most the guy that taught me about smart money concept. This is basically we get in snipers into this all the time. This is not a big deal anymore. So we're taking that down to that demand zone where that move pushed up. So I'll be making more videos because it's interesting to see how this way is way more easier. You'll pass prop firms almost 1 or 2 trades. And then even if you lose, I mean, if you get it down pack where you can risk 0.5% to make 3 or 4%, or risk a quarter, maybe. Like if I would have got in maybe up there, let me see. Let's say if I would have got in all the way up there at that wick and risked a quarter of the a percentage from here. Let's see. So you've been up 1%. You'll be a little bit above 1% up right now. You could close half of that and put that break even. But I don't like risking a quarter. I'm gonna risk a half or 1% on my trades. If I risk half, I could get the 3, the 4, the 5%. If I risk the whole percent, oh my God, that's 8, 9%. And I'm gonna keep getting better at this as years go on. Keep getting better and better and better in my entries. Keep doing this, getting better and better and better. Then after a while, these prop firms are gonna be like barbecue chicken. It's gonna be easy. But yeah, that is basically how you get into some of these trades. There's some notable ones like this one. See how you would have got in and you would have been in profit. And then I closed it at break even, closed half and put it at break even, but it came and hit my break even because obviously it wants to come and touch a higher supply. And that's some of the issues that you might have with supply and demand. That's just my growth that I gotta go through with as a supply and demand trader. If it was making this, if it made all this demand down here, and obviously big giant W, you can think about that too. So it wants to come and touch these up here or that one, right? It wants to touch other supply zones. Then you can get the sell off of it. But as time go on, it's going to be less mistakes with this. The guy that put me on, he's literally 85 to 90%. And if he put at break even, it'd be crazy. 6-figure, going on 7. Great guy, lives in Florida. Has a group of people that are doing it too. Most smart money concept traders I know are profitable. And it's just, that's the wave. That's the wave of trading. Understanding the market flow, understanding whack off, understanding the basics, understanding what you're looking at as far as supply and demand zones go. So that's it. Hope you guys are going to make some good profits this week. Stay tuned. Got some more videos to come, and see you next time. Peace.